All right, so in this video, what I want to do is talk a little bit about time and how critical time is to success in trading. Here at NetPicks, when we survey brand new people coming to us, typically the success rate is about 8%. That means about 92% are not currently having success in the markets when they start with us. That's kind of our starting point. And one of the big reasons I tell people a lot is I almost can bet that you may very well have a trading system somewhere in your office, on your computer, on the shelf that potentially could be successful, but the biggest factor that you didn't take into account or the developer didn't take into account is how dramatic time can be in the success or failure of a trading system. In fact, of all the variables and inputs that we have in any of our trading systems, time is probably very near the top of the list. And what do I mean by time? Time has to do with the time of day that you start trading a system or a trade plan and the time that you end. So here on the chart, you can see a chart of, just so you know, this is crude oil futures, and this is a day trading chart. And I want to show you mechanical results on a performance report. So let me bring that up really quick. Okay, and this is basically over, looks like about a 60-day, 45 to 60-day period. And you can see it's generally pretty good equity curve here overall, right? You got some winners, some losers, but it's certainly gone in the right direction. And so, normally most people might look at this and go, hey, I'd be pretty satisfied with this. Maybe there's a way to improve it. Maybe there's a way to reduce down the number of trades to increase the average per trade. But let me show you something what I mean by time. Okay, so let me bring up a strategy performance analysis. Okay, and one thing I recommend you do if you can is go ahead and try to watch this on the largest size you can, and you can click a little gear in YouTube, lower right hand corner, and try to pick the biggest resolution overall so you can kind of see the numbers a little bit clearer. I'm going to go ahead and enlarge them a little bit. So this is the column we really care about, right? Net profit. Now this is based upon running optimization. So there's always pros and cons with optimizations. You got to be very careful about curve fitting, but I want to show you something here. This column here is all the start time, and this is in Central Standard Time. So this says if I started at 7:56 Central, 8:56 in the morning New York, okay, where typically the pit and everything opens at 9, we would have the best overall profit over the last 2 months. Now, I know it looks a little weird when you get a time like 760, 61, 62. I just skipped by 1 minute. So anything 760 to 800 is 8 o'clock, basically Central, or 9 o'clock. So all these that are 3940 is just basically the same thing. That means starting at 8 o'clock Central or 9 o'clock Eastern. So the best overall is starting at 8:56. Now, you may argue, hey, that could be a little curve fit. Why would I pick that over 8 o'clock straight up, and $50 difference over a lot of trades? You're right, it makes no difference. The thing I want to point out though is let's go to the very bottom. What if we started just 30 minutes prior at 8:30 New York, 7:30 Central? The profit on the exact same mechanical system, all the rules the same, doing nothing different other than starting 30 minutes earlier, you only made $820 on 111 trades. Obviously, your average per trade, I doubt, even really covers your commissions and any slippage. So think about this for a moment. Everything identical, only difference is start time. Now look at the next line up. Starting 1 minute later, your result goes from $820 to $1,790. It's almost like you got to scratch your head, like how could that even be? But I want you to understand how critical time is to what you do. You can't take any trading system, indicators, plugins, anything like that unless you do a very thorough analysis of when you start trading it and when you stop trading it. And this is focusing, of course, on day trading. There's even things on swing trading that are time-based. But a lot of times that's the type of charts you use. Hourlies, 4-hour, dailies, again, can make a dramatic difference. But to me, very incredible that a 1 minute difference in start time can double the result. Okay? In fact, you can see as we work up the chain here, even 4 minutes later goes to 2730, right? Amazing, actually. When you think about it, 4 minutes difference in time. You go from maybe you're trading it this way and losing money, and you never knew it, but if you would have started 4 minutes later, you would have had a profitable system. I mean, literally almost 4 times the performance. Let me go ahead and jump over to the S&P E-mini, which more of you may be familiar with, and show you again how dramatic this can be. Okay, so here's an equity curve on the S&P E-mini. This is over a little bit, about a month, a little bit over, and it's trading multiple contracts. So in this case, so don't get too excited about one contract at $14,000 in 1 month. Really not going to be doable. But on multiple contracts, you can get the idea. And certainly a great looking curve. Obviously a little bit of drawdown recently, but now bouncing back nicely. So everything looks pretty solid there. And again, you have to think about, well, what are my start times in order to achieve this? So again, my chart here is based upon Central Time, so I try to convert it for you a little bit. So starting at 9:32 New York, okay, that's 2 minutes after the stock market opens. That gave me my best profit. See, a shocking result. Starting 2 minutes before, literally at the opening bell, your results get cut in half. And this is something we've been teaching for years. You got to stand aside, usually for a minute to 2 minutes, at the opening bell, and this is why. I mean, look how dramatic the results are. Because we see a reversal almost every day right about the 1 to 2 minute mark. It's really almost incredible how often that happens, and it will trap you typically between 9:30 New York and 9:32. So look at how dramatic that result is. But now I want to show you something. See the net profit, 11,500? Let's go down and say, what if we just showed the worst result? All right. What if I started at 8:44 Central or 9:44 Eastern? So just 12 minutes later, still just a little bit over 10 minutes into the session, same exact system entries, everything mechanical, minus $9,000. Right? Very dramatic. So what if you had this trade system, and for whatever reason you decided this is the time I'm going to start? You didn't do enough testing on time. And you're like, oh, this is the worst system. It's terrible. And you're right. I mean, minus $9,000 on 45 trades never going to get you anywhere. You're going to be in the 92% who are losing money, right? But if, just lo and behold, if you would have started 12 minutes earlier, you had an incredibly profitable system. So bottom line here is you have to really focus very hard on start time. So let me give you a few that we've found have worked for us. Again, it's going to be pending different trading systems, but the S&P E-mini, the Russell E-mini, the NASDAQ E-mini, 9:32 New York time tends to be the golden start time. Okay, typically we don't like to go any later than noon Eastern. By the way, as far as like a circuit breaker at the end of a session, that's a whole nother maybe video when you should end your session, because afternoon trading is not nearly as successful typically as the morning. Crude oil that I showed you, 9 o'clock, I have found to be generally the best overall. Now, there may be some exceptions depending upon your system, but very much when I'm looking more universally, that tends to be the best start time. The same with other energy markets like heating oil or unleaded gas. I have found 9 o'clock Eastern, very good start time. The metals, 8 o'clock Eastern. Okay, so gold and silver tend to have best performance starting at that time. Now, of course, the number of the markets we could talk about. If you want to leave any questions in the comments, I can tell you what we typically use in other markets. If you want to leave those, be happy to share those with you. So I want you to walk away with something here, is that you need to test heavily start time and stop time. Don't give up on a system just because it's not working if you haven't tested this variable. I hope these fairly dramatic differences is maybe an eye-opener and a light bulb moment for you how critical this is. All right, so hope that made some sense, helped you out a little bit, and we'll be back with you soon with another video.